Hi, today we are going to talk about the price earnings multiple model and how to use it to calculate and how to value the true value of a stock. So this first text box here, we're going to input our stock ticker Microsoft as our example today to input into our price earnings multiple model. We're going to input our fiscal period for analysis. We will select 22 quarter 1 for this example. Input the number of years into the future to project earnings per share. So we are going to project earnings per share 5 years into the future. Input the expected earnings per share growth rate. We are going to change that number. That's not currently set at 9% because we want to give this a 25% conservative growth rate. So we're going to take that 9%. So we'll take 9 and multiply that by 0.75 equal 6.75%. So instead of saying that our earnings per share growth rate is at 9%, we'll use a conservative growth rate at 6.75%. And value investors such as Warren Buffett like to use this as a margin of safety because it's hard to assume that a stock would grow at a rate of 9% every single year. So that's why we provide a conservative estimate and use a 6.75 here. 0.0675. So that's equivalent. It's in decimal form here. That's equivalent to 6.75%. And discount rates, we'll leave that at 0.09. And that's equivalent to 9%. The reason why we're setting the discount rate at 9% is because we want to be able to justify investing in the stock Microsoft versus investing in an index fund such as the SP 500, which returns an average of about 8% per year. So we're going to hit submit here. And the model should go ahead and do some calculations for us. So the model will calculate what the true value or the intrinsic value of Microsoft would be as of when the 2022 quarter 1 data was released. So the 2022 Q1 data that was released by the SEC on this date, September 30, 2021. And so the projected intrinsic / true value of Microsoft would be $748.45. And the actual stock price as of September 30, 2021 was $281.92. It also predicts, using this model, the price earnings multiple model, what the stock price would be 5 years into the future, which would be $1,151.59 here. So we can see that the price of the stock is currently undervalued by 165%, because if we take a look at $748.45 and $281.92, what it is currently, we can see that $748.48 is greatly higher than what the current stock price is. So it's means that the stock price is currently a buy back then in September 30, 2021. So how do we arrive at that valuation? Well, there's a few steps here, a few input variables and calculations that were used to arrive at the PE model valuation. One is we inputted our earnings per share growth rate at 6.75%, our discount rate at 9%. We take a look at the PE ratios over the last 5 years, and this list here, this whole entire list, it calculated our PE ratios for the last 5 years, if that PE ratio was available, of course. But it takes, it looks like the last PE ratio that was calculated was 2017 Q1. And so we can see that the PE ratio is basically, to calculate the PE ratio, you take the stock price as of when that data period was released, and then you divide that by earnings per share, which should be reported on the financial statement, to get $104.03 for the PE ratio of on 2022 Q1 here. And it does that until 2017 Q1, all the way back to 2017 Q1. And so if you take the average of what the PE ratios are on that list, it's 93.02. And then earnings per share, 12 trailing months or the last 4 available quarters, if that's available. Basically, the second part right here, or last 4 available quarters if available is sometimes when I built this application, it wasn't able to get every single quarter, but I mean obviously most quarters were available, so it just takes the last 4 available quarters of earnings per share. If the 12 trailing months, which is what TTM stands for, is not available. So our earnings per share, 12 trailing months or last 4 available quarters, was 8.94. And basically those were all of our input variables. Step 2, we're now going to take a look at the table, which shows projected earnings per share, total 12 trailing months over the following years. It also shows the formulas used to calculate earnings per share. So we can see in year 0, earnings per share was 8.94, which was shown in step 1, earnings per share 12 trailing months. In year 1, earnings per share was 9.54, because we can take a look at our earnings per share from year 0 and then multiply that by 1 plus our conservative growth rate. So 8.94 times 1 plus 0.0675. And then we pretty much do that until we get to year 5 here. And again, all the formulas are here. So you can open up this application yourself, financeagents.com. It's also listed on the description section of this video. So feel free to open it up, and if you have any questions on the calculations, you can use this application. Step 3, we'll determine what the company's stock price is in 5 years. So we take the earnings per share, 12 trailing months in 5 years, which was what was calculated year 5 on the table for earnings per share. We multiply that by the average PE ratio to get $1,151.59. And then to finally calculate what the stock is worth today, in other words, when the data was released, not September 30, 2021, we had to get the net present value of the stock to get what the stock was worth as of September 30, 2021. So we take the $1,151.59, what the stock price was worth in 5 years, and then we discount it to today, and see that exponent there to the 5th power. That's just represents 5 years. So 1 plus our discount rate to the 5th power, and then we get $748.45, which is what the stock price is worth as of September 30, 2021. And we can see that it matches up here, $748.45, and then with step 3, what the stock price is worth 5 years from now, $1,151.59. That's how you calculate the PE model. Thank you, and have a good day. Bye.